Are you ready? Are you ready? Are you ready? Let's go.
Welcome to Unpacking the Home Advantage. My podcast is to help you understand the mortgage loan side through my experience and knowledge. My name is Paige Ashby. Are you so ready to buy a house but need some directions? Or are you questioning if it's still a good time to buy? It is not about a purchase transaction. It's about an investment for yourself and your family. Stay tuned and I'll show you how to grow your portfolio. Let's get unpacking. Have you been planning to purchase a property? With all your hard work to build your assets, I know you don't want to make the wrong decision. So I'm here to break it down to you so you can understand what it takes to own a property, what it takes to be an investor, and how to grow your portfolio as a beginner. And the most asked question I get is it still a good time to buy? Let's go through this. Most people don't buy a house to buy a house. When I do a consultation with my clients, I don't just ask surface questions. You are not a transaction to me. I need to know the reason for your interest in buying a home. Is it because you want to upgrade, downgrade, or is it because you want to be closer to your work or you want to be closer to your family? Or is your goal just to grow your portfolio? What is the true reason for buying a property? Whatever the reason is, you have to understand the steps to buying a property. The first step is to understand the qualification. It involves income qualification, assets to support your down payment or reserves that may be required, and credit history. If you need more details, you can catch me on my episode 2 income type podcast. So the second step is, what is the purpose of your purchase? Is it to live in? That is called primary property. You can also turn this into a rental after you reside in it for at least a year. You can do the same thing if you choose to purchase this as a second home. Now, if you're buying this as an investment property, then you can do a long-term rental or a short-term rental, also called Airbnb. This will require more reserves. It just depends on the program that you go with. Most people think as long as you have the rental income to cover the mortgage payment, you're fine. Well, this is false. Only 75% of the rental income can be used. So if you charge $2,000 for rent, then only $1,500, 75%, is allowed to be used. So if your mortgage payment is $1,500, then it's a wash. But this is a very simple, clean example. Now, the most important question you need to ask yourself is, what is your long-term goals? Are you buying a primary property to pass down to your family, which you can easily add a family member on title. You don't have to refinance the whole thing. Or are you going to turn it into a rental property later? If your goal is to buy it as an investment property so you can grow your portfolio, then you can work on building your equity so you can use it to buy more properties. One idea is upgrading your home so you can increase the value. Now, a line of credit, aka HELOC, is a great tool to use for remodeling or to use it to have quick access for down payment on another home. This will give you a higher chance of your offer being accepted over a contingent offer. So a contingent offer means is one needs to sell their existing home in order to buy a new home. Now, I also want to mention a great program as a consumer to use to buy an investment property. It's called DSCR. It stands for Debt Service Coverage Ratio. This program allows you to buy an investment property without using your personal income to qualify. We use the average rental income in the area, so your appraiser will include this in the information on their report. So if you have the down payment but not the income to qualify, then this is a great program to build your portfolio. It does require the down payment, which ranges around 15 to 20%, depending on what lender you use, so you can go over that with your loan officer. This program is for only investment properties, as we have to use the rental income to qualify. If you need more information, you can listen to my podcast, episode 1, Loan Programs. So being prepared financially and emotionally is crucial because you are building wealth. The last thing I want to address is it still a good time to buy? In my opinion, building wealth is all about timing. Like they say, sell high, buy low. Because the market's not great right now, I think it is still a good time to buy, especially with builders. They have to finish building, so they have to sell. Now, in regards to existing homes, I still think these homes will still be priced reasonably because some of the people that are selling have to sell because they have to move for some reason. So there is still negotiation room. I'm still seeing seller concessions, which means credits that will go towards your closing cost or to buy down the rate. I would not consider buying down the rate unless you need to qualify, because rates are not forever. You can always do a refinance rate reduction after 6 payments. In my opinion, use your seller concession to pay other closing costs. If you have a good loan officer, they will not charge you much when you have to redo the loan to do a rate reduction. Now, remember a year ago when prices were overpriced by like 50 to even 100,000? So yes, now is still a good time to buy. Happy house hunting. Now, if you enjoyed this information, please make sure you follow. And if you know of anyone that may benefit from this, please share. More episodes to come. As an active mortgage broker and mentor, if you have any questions or need me to pre-qualify you, please reach out to me through LinkedIn, Paige Ashby Lending. And my other contact infos are also listed in my episodes. Thanks for being part of Unpacking the Home Advantage.